Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
All right, good morning, folks. Here's your U.S. Markets Wrap with me, Ryan Huang. Some green on the screen. The S&P 500 ended the day higher by 0.4% at 5,912. The Nasdaq Composite also up by the same amount, 0.4%. And we have the Dow Jones Industrial Average above break-even by 0.3%. So all gaining as investors still stay a bit cautious following a salvo of judicial developments surrounding President Donald Trump's reciprocal tariffs. So we have, of course, a bit of back and forth with the U.S. Court of International Trade ruling that Trump has overstepped his authority. But as you imagine, it is now under appeal, so it's back on again. So it is still a bit of uncertainty in the air. And to help us out this morning, we've got Michele Schneider. She is the Chief Strategist for MarketGauge Group. Good morning, Michele. How are you doing these days?
Very well. Thank you, Ryan. And yourself?
That's great to hear. Well, we've been quite busy and we've got more to look forward to, so I'm glad to have your help this morning. So let's get your help first to give a bit of overview of where things are right now. We've had a bit of a back and forth this week. We started the week with some optimism, then it's back down again with the, I suppose, appeal, putting Paris back on. So where are you seeing markets going towards in the coming days?
Well, what's very interesting is that obviously from the April low until what we're seeing right now, the rally has been substantial. And of course, we're right back in the camp of this is a bull market. No, this is just a really amazing bull market rally in a bear market. So I think in order for us to really understand which is which, we have to look at some of the areas inside, under the hood, if you will, of what's going on in the U.S. economy. Not that the market is always following the U.S. economy, but eventually they sort of go into line. So there are certain things that are showing a little bit of stress right now while we just came on the heels of NVIDIA, of course, which was a happy report. And, of course, the back and forth on the tariffs, although I think people are getting a little bit immune to that. But transportation, for example, which is an extremely key sector of any economy, how goods are moving, how people are moving in terms of transportation. This really measures the robustness of the economy, and we're seeing some weakness. And I find that to be notable because it's really hard to say, oh, the economy is doing great and everything's working well when that's not participating. So that's number one. The other area of stress that we're starting to see with some headlines coming out on that is in the banks, the regional banks. Apparently things aren't quite as rosy as we've been led to believe in the whole entire banking system, whether it's the big banks like a Bank of America or some of the smaller regional banks. And that, as we know, can be a real catalyst to a downturn like we saw in March of 2023. So I think we have to keep our eyes there as far as understanding that the rainbow hasn't exactly filled the entire sky. And then on the flip side, of course, the retail and the consumer has been stronger than anyone would have imagined. And of course, semiconductors and those growth stocks have been right now where people are really buzzed about.
Yeah, that's a great overview. Transportation and banks showing a bit of stress, while on the flip side, retail and semiconductors are chugging along pretty okay. That's interesting as well to note because of the earnings season. We've been getting a lot of commentary. The latest, Macy's, saying they will be hiking prices. We've heard from the likes of Walmart as well, and many others talking about how the coming quarters might be a bit tough. How do you square this with what the retail side is saying, with the uncertainty, the headwinds, versus what you're seeing with the consumers?
Well, yes, the retail space is actually doing relatively well. But we also have to understand that it can turn at any time. You know, we had some big numbers come out in the U.S. yesterday in your time. GDP, which was weaker, consumer spending, which was weaker. We also had jobless claims up. So what we're starting to see is contraction in the economy, and the consumer may not necessarily be as bad a shape as we would think, but that's very different than being in great shape. So we have to see where they're spending money, right? And so yes, tariffs are definitely a warning, but we haven't really seen the effect of that. While a lot of prices haven't been as bad, like oil, for example, because we're not necessarily in high inflation right now. So I'm looking to see where are the consumers spending, and I think the biggest growth area for consumers right now is what I've coined as the vanity trade. And we are seeing, because of the result of the diet drugs, we're seeing a lot of spending in retail that has to do with self-help and beauty and exercise, skincare, makeup, that sort of thing. If you look at e.l.f., for example, it reported well, and it was up over 22% today. That alone tells you that there's that small segment that's helping.
Yeah, talk about being in great shape. The vanity trade is still going strong. Are we one step closer to seeing a Vane ETF?
That's a great one. I'm sure somebody has thought of it. I haven't seen it in the making yet, but I feel like I should take credit for it if that
You
happens.
should. Yeah, you brought it up a long time ago, so big shout out there. All right, let's talk about what else is going along quite fine, and that's in the space of alternative assets. Gold, for example, has been on a bit of a tear, outperforming equities. And of course, people have been wondering, is it too late to jump on that bandwagon? What's your take on this?
Well, that's a really great question, and it's a question I get asked a lot. And the truth of the matter is, right now, considering that our big correction in gold was down to 3,200 and got a lot of buying in there, and as we can see, central banks are still big buyers of gold. I would say that the retail space hasn't even really begun to buy. Or if they did, what they're doing, they're selling the strength because they don't believe it can continue. When that psychology flips, and I believe it will, because we have, even though things look sort of like Wonderland in Trump's world, if you will, we know that there's cracks in the foundation. So if those cracks get wider and we start to see buyers coming in on strength, I would say it is not too late to buy gold. Obviously, you always have to have your risk parameters in mind, but it's certainly within the realm of possibility that gold continues up to 3,700, 3,800, 4,000, and then we can reevaluate from there.
Yeah, of course, gold has been doing well, up 26% year-to-date. Silver up 15% year-to-date. Is that where you should be looking as well in terms of, I guess, another option besides gold? How much momentum is there?
Well, that's it. So silver has also been incredibly strong. Obviously, relative to gold, the gold-to-silver ratio is still quite high. We're still looking at a gold-to-silver ratio between 99 and 100, which is historically new highs. So what you want to see in terms of silver is a couple of things. I'm very bullish in silver, by the way. I think from a fundamental standpoint, I'm reading a lot about short supply. I think it's definitely a source that is needed as a conduit and used in not only solar energy, but in data centers and AI and those energy needs. But what we really want to see is two things, and I think this will make it very easy. Number one is we want to see that ratio get a little bit more in the favor of silver. We want to see that gold-silver ratio break down under 99, which basically means that right now gold is trading 99 times the price of silver. You want to see that come down, number one. Number two is you want to see silver get a move over $34 an ounce. And like I said about gold, you want to see the buyers stepping in on strength as opposed to the retail sector trying to sell strength, thinking that it's going to top out every time it moves. That's when you can start to see a parabolic move. And, of course, the inflation narrative would start to flip as well if silver starts to begin to outperform gold, or at least do better than what it's doing currently against gold.
All right, still upside on a couple of things in the market, gold among them. And we've been in conversation with Michele Schneider. She's the Chief Strategist for MarketGauge Group. Michele, we've got to leave it there for now. Thanks so much, and I'm hoping to catch up again soon. Thank you.
Thank you so much, Ryan. It's great to talk to you.
All right, as always, great chatting with Michele Schneider, Chief Strategist for MarketGauge Group. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.